there have been speculators in the market that have been attempting to call out the next big short. And so the big short in 2008 was basically, there were a couple of outsiders from Wall Street who sort of saw what was going on in the housing market and decided to short the housing market heading into 2008. They made a lot of money. One of the most prominent figures was a man named Michael Burry, who we will get into in a second. There have been many people who are sort of saying we're in a bubble, which is probably the case. The AI stocks that are dominating sort of the market right now, that make up like 25% of the entirety of the S&P 500, it doesn't really make sense. And so we can see this, basically what's happening is we sort of are in this very weird loop where all of these multi-trillion-dollar companies are all just kind of pushing money around. And so obviously this is a very hard graph to understand, but basically Nvidia is making deals with all these other companies, and all these other companies are making deals with Nvidia, and they're just kind of pushing money around. One of the most sort of interesting things that happened was OpenAI made a deal with Oracle and AMD, where OpenAI took a stake in AMD. They bought a bunch of shares of their company, and then they made a deal with Oracle for server rack space. Oracle said that they were going to buy AMD chips, and so AMD goes up by 20%, and OpenAI now has bought shares of AMD, and because of literally nothing changing fundamentally about the company except for Oracle announcing the partnership with AMD, their value of that company goes up. They can sell those shares for the extra 20%, and then they can use that money that they just made on their AMD shares to go actually pay Oracle. It's called vendor financing, and it was a kind of a big deal in 2000. This is a sign of a very unhealthy market when the biggest companies are all just kind of trading money back and forth, because it's not actually creating any value. And eventually the money runs out. Eventually people have to get paid. And once people actually have to get paid, then you get problems. And so if you were unaware, one of the big things that was kind of funny was GDP growth. GDP growth is the measure of all of the economic activity inside the United States. And as you can see from the headline of this article, without data center spending, GDP growth is 0.1%. The actual GDP of the United States of America, the actual economic activity, is not going up. It is not growing. But because of data centers, we see it was like 4% on the year. Something is going on. Something is happening that is not good. It is not healthy for the markets. It seems to be sort of centered around the big tech stocks: Nvidia, Oracle, AMD, Microsoft, Amazon. And so this, of course, not healthy for the market. But what this is ultimately translating to is actual tangible revenue growth. This is a slide from Nvidia's most recent earnings presentation. Their revenue has gone up 114% year over year. They sold $61 billion in 2024 and in 2025, which we're not at the end of the year, but this is how this company specifically does it. They sold $130 billion, and I think they're on track to double their revenue again this year. So they, $260 billion this year. How long can this continue? Nobody knows. But as of right now, everything is going up. Operating income has more than doubled. EPS has more than doubled. It's been a great time to be an Nvidia shareholder. It's up 45% year to date. It's an almost $5 trillion company. At one point, it was a $5 trillion company. So like I said, there's real sort of tangible stuff that's happening. One of the companies that is involved in this sort of AI hype is a company called Palantir, which is led by a guy named Alex Karp. Palantir is a software company, fundamentally. They make software specifically for the U.S. government. And they have also been on a meteoric rise, going up 2,000% since they went public in 2020. And they went public in the middle of stock hype. So October 2nd, 2020, they've gone from $9 a share to almost $200 a share. And I think at one point they were $200 a share. Yeah, they were $206. So this is a company that has benefited tremendously because literally all they do is they make software for the government, specifically for the military. And there have been some privacy concerns with what Palantir is actually doing with sort of spying on Americans. And there are a lot of concerns surrounding that. And I think those are valid concerns and we should probably be talking about them. But that is not necessarily the scope of what I'm talking about today. All you really need to know about what I'm talking about today is they are a nearly $500 billion company. They only do about $1 billion in revenue. Almost 500 times revenue for a company that it's growing. Like, sure, its revenue growth is 60%, but Nvidia's revenue growth is 100%, and they're only up 45% on the year. Palantir's up almost 150%. Even if you discount basically everything else, it would seem that at the very least, Palantir fundamentally is probably a bubble. The valuation is so stretched, it's unbelievable. I can't imagine that there's any willing market participants that are willing to purchase this stock. However, there are. And so this has led some people, going back to The Big Short, we have Michael Burry to talk about what he sees as a bubble. So Michael Burry obviously has his Twitter account. It's called Cassandra Unchained. He recently tweeted out, sometimes we see bubbles, sometimes there is something to do about it, and sometimes the only winning move is not to play. And then he tweets out a picture of, this is actually the actor that played Michael Burry in the movie The Big Short. It's very obvious. He is paying homage to The Big Short. He thinks AI is a bubble, but his words are interesting because he says sometimes the only winning move is not to play. Michael Burry is playing. Michael Burry runs a company called Scion Asset Management, and this is their most recent 13F. And this is a very good way to track big investors, Michael Burry being one of them. So let's take a look at what he has purchased. Puts on Palantir and Nvidia, calls on Pfizer and Halliburton to the tune of $1.2 billion. Now, to be clear, he does not actually own $1.2 billion in puts. He owns about $150 million in assets under management, but through the power of options, he has essentially exposure to $1.2 billion worth of shorts. So he is shorting Palantir and he is shorting Nvidia. And for those of you who may not know, when you short a company, you're basically going into the market and you're saying, hey, I think this stock is going to go down over the long term. Michael Burry says, hey, maybe the best option is not to play. But clearly he's playing. He has made a enormous bet against Palantir. And actually, we saw Palantir sink on the news. It reached a high of about $210 and sank down to almost 12.5% in a day, down to 183. Once it was announced that Palantir was being shorted by this guy who ostensibly has a pretty good background in investing. And so, of course, Alex Karp, the CEO of Palantir, who is obviously benefiting tremendously from the AI bubble, calls Michael Burry crazy for betting against Palantir and Nvidia, the two companies that, as of right now, ostensibly control the market. Nvidia specifically. Right now, Nvidia is 8% of the S&P 500. So if you go out and you buy an S&P 500 index fund, 8% of all of your money is going into one company. Remember, the S&P 500 is made up of 500 different companies. But this is very bad. This is very unhealthy for the market. Nvidia should not be 8% of the S&P 500. And Apple, Microsoft, and Amazon and Google should not be making up 30% of the entirety of the S&P 500 is like 5 companies. So basically, you have the big short investor, Michael Burry, who is essentially making a gigantic bet against Palantir and Nvidia. That's basically what's going on with the big short, the bigger short, Big Short 2. And I tweeted this out in February of 2024. When Nvidia falls like 90%, like Cisco did in the early 2000s, I will be buying all the shares. All the AI hypesters will be selling. Great company, not so great price. I very firmly stand behind this.